Hello everyone, welcome back. Patrick here. You guys know that this past week has been very difficult for SPACs. The prices have dropped tremendously, but that actually creates a buying opportunity for a lot of these SPACs. Very often recently when I made videos, it was kind of frustrating because it ended up being, hey, this company would be great if it didn't go from $12 to over 20 instantly and you missed it. But now we've got some opportunities to enter these SPACs at much better prices. So today I'm going to show you my shopping list. You guys often want to know what I'm buying, so here it is. I hope you enjoy it. Alright friends, when the market is crashing like it is right now, I'm looking for opportunities to add more shares or open positions. So what I do is I pull up my watch list. A lot of these SPACs and stocks that I was interested in before, but for one reason or another, I just couldn't buy anymore because the share price was too high, or I actually sold out of it and now I want to re-enter the position. So a lot of these SPACs are still good, right? It's just that the share price now is much more attractive than it was before. Ride is one of these companies that I never really held a big position in, and there was a lot of enthusiasm with this company. We're going to start with the post-merger SPACs, and after in the video I'm going to go with the pre-merger SPACs. All right, so Ride, as you guys know, went from $30 very recently all the way down to under $20, and this is a company that had a lot of enthusiasm before. We still expect that they're going to build their first electric vehicle pickups later on this year, right? And next year they should start to have a nice little ramp up in their production. So this is a company that I don't intend on opening a big position in, but I like a lot of the electric vehicle companies. You guys know that my strategy is to build a basket of them because we really don't know which ones are going to be extremely successful yet, right? So we'll only know that in 5 years or something. So this is why I'm going to be opening a small position on Ride, especially if the share price keeps dropping a little bit over the next week. Next up, we've got the Tattooed Chef, the cauliflower company. You guys know that I always liked this company. Now it's dipping under $20, but it has held up fairly well over the past couple of months after the merger. One of the big reasons, in my opinion, is the big support that it's getting from YouTubers like Jeremy from Financial Education. We often discount like the retail investors, but when there's a lot of them and a lot of big YouTubers are talking about it, it's just going to help create that support. Especially when he keeps saying that, oh, under $20, I'm going to buy more. Well, a lot of his followers are going to do that too. So it helps build a base for this stock. So I'm going to keep buying. I'm going to add more to my position. And also, every time I go to Sam's Club, they have more and more items. I recently picked this one up, plant-based sausage breakfast bowl, 20 grams of protein. So, you know, the more they add products, the more revenues they're going to get. And the company is going to be profitable, so I still like it. I'm going to add more shares. Let's talk about Golden Nugget Online, GNOG. Do you guys even remember this company? We all liked it before for its revenues and profits, but now all of a sudden it merged and no one wants it. Even though MGM, which is one of my biggest positions, has been one of my best performers. But for some reason, GNOG, no one wants it. The share price has been getting absolutely wrecked over the past month. So right now it is down to 14.27, and I do think we're getting in the realm of being oversold right now. So I'm not going to open a position while it's falling, right? So it needs to stop falling, create a bottom, and at some point it's going to start going up. And then I am definitely going to reopen a position in this company. So again, BetMGM is my biggest position. I like it better than GNOG, but I think it's worth owning some of GNOG. Last but not least, when it comes to the post-merger SPACs, we've got Hyliion, the highly touted electric vehicle company that once was worth above $10 billion, and it was going to go to $100 per share. Well, now it's sitting at $15 right on top of its support, which it hit here, and again this past week at around $15. So now I still feel like this company is too expensive. Currently the valuation is $2.56 billion, right? But we are getting to a point where it's starting to make a lot more sense. And every time they have a positive announcement, like when they announced the new battery recently, there is a surge in buying. People are still excited about this company. They're just waiting for the right time. And until they start to get those revenues and everything, it's probably not going to go tremendously higher. But at $15, if it can stabilize in the next week, I would be interested in buying some shares and just like slowly accumulating until they start production. All right, guys, now let's move on to the pre-merger SPACs. And here we have a lot of good opportunities with companies that I already have in my portfolio, and then also some new ones that were just too expensive and I never got to open positions on. So I'll tell you all about it. But first, let's go to my core portfolio, the ones that I talked about before and you guys probably have in your portfolio too. The first one is GIK Lightning Motors. I'm not going to go into a lot of detail for this one because I just made a video about it yesterday if you guys missed it. But Lightning Motors is one of the most undervalued electric vehicle SPACs so far. When you compare it with the other SPACs, I mean, it is almost absurd how cheap it is. And the fact is, at this point, there's a lot less risk in the downside, and there's a lot more upside potential for this company. So with the share price at $11.79 and the warrants at $3.10, in my opinion, this one is almost a no-brainer. So I bought more warrants last week. I'll probably buy more next week, especially if it keeps falling. But moving on to NGA Lion Electric. Kramer actually talked about it this past week. Of course, he gave it a seal of approval. Kramer likes the stock. It is going to continue getting a lot of positive coverage over the next year, in my opinion, because they actually have products that they're already delivering. All the school buses especially, right? So this is a company that has products, they already have some production, and now in the next year, all they have to do is start to actually ramp up that production so they can increase their revenues. They have a lot of contracts. They have the Amazon contract, so everything is great with Lion Electric. Under $20 with the warrants, under $7 now. That's another no-brainer. I want to add more to my position in this one. And then we have SoFi ipoe, another company that Kramer has pumped this week. It was part of my list of the SPACs that he was most likely to talk about, and he did, right? So everyone knows that this company is going to be doing well, so I don't need to really sell it to you. I own SoFi, both warrants and shares in all of my accounts. So I have it in E-Trade, I have it in my SoFi investment account, which, selfless plug, if you deposit $1,000, you get $50 in bonus, and if you open a money account, and you deposit $500, you get a $50 bonus. So the link in the description and in the comments if you guys want to support the channel. All right, so SoFi, as I mentioned, I have it in all of my accounts. I'm just going to buy it more over time, especially now with the pullback. But this is more of a long-term buy and hold. Like a lot of these other companies, if Lion Electric, for example, goes up to $35 or $40 for some reason, I might be interested in selling it. But ipoe, SoFi, I might actually just keep it and not really touch it. Like the type of company that I'm going to put in the drawer and try to forget about it for the next 5 years. Before we end the video, I want to show you guys 3 positions that are either new or that I'm going to open in the next week or 2. The first one is, I'm not sure if you've heard about this company. They actually make electric vehicles. It is going to be Lucid Motors, ticker symbol CCIV. So this company had a lot of interest before, but now no one wants it. I don't know if you guys know about this one. Look at, like, the share price went above 64 just on the rumor. I mean, that's pretty crazy. Anyway, so if I'm being more serious, you guys know that I bought into this company early and I sold on the way up. If anyone told you that they actually knew it was going to go above 60, they're lying. No one could have predicted that, right? So a lot of people sold before it reached that level, and now they were priced out, including myself. They don't want to pay this much. So after the big crash this past week, I reopened a position when the share price was around $35. I bought some warrants, but since I didn't know if it was going to stabilize at that price or go down more, I just opened a very small position. And now that it is going down more, now I'm going to be willing to actually buy more to dollar cost average down. So recently, it's pretty cool. Dave Portnoy mentioned that he bought into CCIV. You guys know that he has a huge cult following almost, right? So that seems like it helped stabilize the price. Right now it's sitting at 30.75. So this is the type of company where people have a lot of misconceptions about it. Like, it's pretty weird to me that everyone was so excited about it before. Now all of a sudden, all the comments that I'm getting is that the company is a scam, it's overvalued, they're not going to succeed. Well, these are the same people that loved the company before the announcement and before the valuation was revealed. So keep in mind with this company, each $10 is worth 16 billion. Right? So when people tell me the company is going to go to $20 and under, I can almost guarantee you it's not going to happen, right? Because if the company goes from $31 to $20, that's a huge swing of over $16 billion. And there's going to be a massive line of institutions and retail investors willing to buy at that price. So I am fairly confident about this one, right? Of course, it really sucks losing some of our profits on a company like this, but I really have a hard time believing it's going to go to $20. So for that reason, I'm willing to use this as a spec play. I'm not going to go with that big on it, but it's kind of like SoFi. It's the type of company that I just want to hold long term, not really have to think about like the daily ups and downs. At number 9, we've got another spec play, SNPR Volta Charging. I do want to have a little bit of exposure to this industry. Now, I do feel like there are too many of these companies coming into the market, so it's going to be a little bit too diluted, right, between this company, EVgo, EVBox, ChargePoint. You guys know that they keep coming out with new ones, but still, the fact that you can get it fairly close to $10 makes it more appealing to me. I would not pay ChargePoint above $30 or whatever it got to, above $40 at some point. But when it's close to $10, right, that's what the sponsor did, is they factored in the risk that we don't really know who's going to be the dominant player over the next 5 years into the share price, like the valuation that they got at $10. So if I can get these plays between $10, $12, that's ideal. Like at $13, or in this case $12.74, it's not the end of the world, but the closer to 10, the better for these spec plays. So I do want a little bit of exposure into this industry. I like the fact that Volta Charging understands that charging is going to become a commodity. So they're adding a screen, and that's going to help them get the better real estate, hopefully, right, in all of the retail locations, so that they can advertise to the people walking by. And because they actually own the network, it's going to make it even easier to sell these to the actual retail owners, like people that own the real estate properties. So because of that, I do want to have a small exposure into this company, SNPR 1274. I'll probably buy more warrants, especially this week. And now for the final SPAC that I want to open a position on in the next week or two, we have Microvast, THCB. So if you guys remember when I made the review for this company, which is in the description, I made it when the actual share price was at $22. And I mentioned that I did not want to open a position at that price. Sadly, I mean, they had a letter of intent for the longest period, and the share price was fairly low. But as soon as they announced the merger, it jumped to like almost $25. And I felt that that was too expensive. It was going to go down. Well, now with the market crash, thankfully for me, I'm sorry if you're holding the shares, but the share price has been dropping, and now at $16, it is starting to become a very good opportunity for this company, which in my opinion is going to have a lot of success and a lot of support politically over the next few years. So the reasons why I'm saying that is that even though there are some people that say, oh, it's a Chinese company and all of that, look, they are going to create a lot of jobs in the United States, and a lot of very well-paying jobs. First, they have in Tennessee the 287 job factory in Clarksville, right? This is where they're going to be making the batteries. And then they're opening an R&D center in Orlando, Florida, which is going to be very high-paying jobs. So they are going to get a lot of political support when it comes to like being in the United States. And also the Biden administration already said that they were going to look into like the battery supply chain in the United States, because that is going to be critical for their big plans over the next few years of getting more and more electric vehicles in the market, right? So they're going to have a lot of political backing. Now, there's always going to be some problems, of course. Recently, the USPS announced the big contract that was supposed to go to Workhorse was not going to go to Workhorse. You guys know the share price crashed. It is going to be awarded to Oshkosh Defense. Right, so this is a big deal, of course, because Oshkosh has a partnership with Microvast. And as soon as this was announced, again, it went from $16 to over $22. So people knew that this was going to be a big deal. Now, since then, of course, there's always going to be troublemakers on both sides of the aisle. There is some, I'm not going to say an idiot, but let's say an idiot, that one of the Democrats that said he was going to oppose the contract and try to like make it not awarded to Oshkosh because there are not going to be 100% electric vehicles. So we'll see what happens with that. But in the short term, it is helping us get a better entry point. In the end, are they going to get the contract or not? It would be nice if it does. But I still liked the company at $16 regardless without this contract. So it's not a big deal for me. It doesn't really change the calculations. I think the company is going to be very successful in the future. So this is a perfect time for me to open a position. And if they end up getting the contract, and it's totally confirmed, then that's just going to help the share price recover even more. So this is my last play that I want to open, that I wanted to tell you guys about. I feel like this is a great spot for it. So I hope you enjoyed this video. Let me know if I missed out on someone, or if you have some of these that you're going to be buying too. Let me know in the comments. I always enjoy reading you, and I'll see you guys in the next video.